You just gave an address to the crowd here. What was your key takeaway?
Well, the key point I'm trying to make is that the global economy is now entering a phase of normalcy, at least in terms of growth dynamics. We're no longer being held back by the aftershocks of the global financial crisis. That's allowing a more synchronized global upturn taking hold, one in which you get reinforcing dynamics on behavior, confidence, financial conditions. And I think we're in a phase of where global growth is going to be stronger than at any point in this expansion.
Now, capex in the U.S. is on the increase. We're going to get preliminary GDP out later this week. What are you expecting? Is it going to beat the expectations? I think of 2.2% or something, or you expect 2.5% is the consensus estimate.
We're expecting a 3% reading, and again, I think part of the strength comes from capex. There's also a business spending part of that that's from an inventory support for growth. And we think, again, the global story in terms of normalcy has a very powerful part of it, which is about business spending and capex. And I think the U.S. number this week is going to be part and parcel of that story.
And then there's ECB tapering as well that's going to begin. What's the impact maybe on Asia first?
Well, let's first talk about the ECB separately here, which is to recognize also that we're in a world of more normalcy on the growth cycle. We're in a world of very abnormal dynamics with central banks' balance sheets bloated in the G4 and policy rates across most of the world still very abnormally low. So I think part of the challenge here is how do you get there? And what the ECB, we think, is going to be doing this week is telling us that they want to taper, they want to move towards a stable balance sheet. But that is not going to suggest that they're moving on rates anytime soon. And I think the guidance is going to be very strong on that front.
Now, back to the Fed. I know you don't want to necessarily get into the speculative game and betting on a particular horse race. 5 names have been out there. We've been reporting as well. That's down to maybe 2, Jerome Powell, John Taylor. What are the implications of this choice to you?
Well, I think the implications of changing the Fed chair and also having 4 seats turn over at the Federal Reserve Board over a period of time is quite significant. It does matter who gets chosen. However, I do think we have to realize that power at the Federal Reserve in terms of the chairman is given by the committee. It doesn't come when you walk in the door the first day. So the person who comes into that job is going to need to spend time building credibility, building their authority. And I think what that suggests is that at least over the first year, the committee is going to be really the center, and we'll have more continuity than might be the case over a longer period of time.
How significant is it that we could get a new Fed chief, we could get a new BOJ chief by April, we could also get a new PBOC governor with Zhou Xiaochuan long past retirement age?
Well, I think of the 3, I think the Fed chair is the one which over time could have the greatest impact in terms of shifting where policy is going. I think both in China and in Japan, the choices are going to be ones of continuity. We do actually believe that Kuroda is going to get a second term. So I do think it's the Fed chair change from a point of view of policy, even though it will take time to see those changes, is probably most important.
Now, another Fed rate hike by the end of this year, right?
In December, we're expecting the Fed to move.
And next year?
Next year, we're on track with the Fed, expecting to see 3 moves. And again, I think part of the story here is that the world is normalizing. The Fed has got work to do. Policy rates haven't yet gotten back even in line with where the rate of inflation is in the U.S. And we do think that the market is going to have to continue to reprice the Fed here. It may do it in a number of steps, but that is, I think, part of the outlook here.
You think inflation pressures, though, will not build for another 6 to 12 months, right?
Well, I think we are probably going to find out that the head fake of very low inflation readings this spring is going to be past us. I think we're already seeing that in the food and energy space, and we do think we're going to see that on the core inflation side. But I think it'd be a mistake to think, even if we start to tilt back upward here, that we're going to see anything other than a relatively shallow path towards higher inflation in the U.S. and pretty much everywhere else.